Fitch Solutions has projected Egypt's economy is on track for steady growth and falling unemployment over the next decade. In its latest reports, Fitch's BMI research unit forecasts GDP growth of 4.7% in the fiscal year 2025-2026, rising to 5% in the fiscal year 2026-2027. Over the long term, annual growth is expected to average 4.6% through 2034, up from 3.8% between 2010 and 2019. Meanwhile, Egypt's unemployment rate is projected to decline from 6.2% in 2025 to 4.4% by 2034, despite a growing population which is set to reach 132 million by then. Private consumption is expected to remain the main economic driver, making up 87% of GDP by 2034. The U.S. Treasury Department has officially removed Syria from the Office of Foreign Assets Control sanctions lists, allowing American and international firms to legally conduct business with Syrian entities. The move delists over 500 individuals and organizations, including Syria's central bank, and paves the way for the country's reintegration into the global financial system. The decision enables the resumption of dollar transactions and reconnects Syrian banks to SWIFT. Some restrictions, including anti-terrorism laws and the suspended Caesar Act, remain in effect. The General Authority for Statistics has reported that Saudi Arabia's non-oil exports, including re-exports, rose 22.1% year-on-year to 26.6 billion riyals in June 2025. National non-oil exports, excluding re-exports, increased 8.4% to 17.9 billion riyals, while re-exports jumped 60.2% to 9.55 billion riyals. The growth in non-oil trade helped offset a 2.5% decline in petroleum exports, which fell to 64.68 billion riyals. Overall, merchandise exports still grew 3.7% to 92.13 billion riyals year-on-year. The share of oil exports in total exports declined from 74.7% in June 2024 to 70.2% in June 2025. In the commodities sector, the Center for Research on Energy and Clean Air has reported that China commissioned 21 gigawatts of new coal-fired power capacity in the first half of 2025, the highest level since 2016, despite simultaneously leading the world in renewable energy installation. The surge, driven by past energy shortages and grid policies, could push annual additions to 80 gigawatts, the most in a decade. While coal's share of power generation has declined, capacity payments and lack of retirement plans continue to support new projects. Despite the coal expansion, China's carbon emissions fell 1% in the first half of 2025 due to soaring renewable output. Investment firm Jefferies has raised its year-end S&P 500 target to 6,600, up sharply from 5,600, citing stronger than expected second quarter earnings, a resilient economic backdrop, and expectations of Federal Reserve rate cuts. The upgrade aligns with recent moves by UBS Citi and HSBC, reflecting improved market sentiment. Nearly 80% of S&P 500 companies beat earnings estimates this quarter, well above the historical average. Jefferies also forecast nearly 10% earnings per share growth for 2024, reaching $267. The brokerage expects 3 Fed rate cuts this year, beginning in September. In markets, global stocks showed a mixed performance during Monday's session. In the U.S., Nasdaq futures gained 0.25%, while S&P 500 futures edged down 0.07%, and Dow Jones Industrial Average futures dropped 0.42%. In Europe, Germany's DAX inched down 0.40%, and France's CAC 40 dipped 1.22%, while the UK's FTSE 100 increased 0.13%. In Asia, the Shanghai Composite gained 1.51%, the Hang Seng Index increased 1.94%, and the Nikkei 225 were up 0.41%.